Myself Vaibhav. In today's session of Visual Jforex, I will be demonstrating to you the use of indicator block named linear regression. We will see how we can utilize this indicator to design and develop the algorithms on the Visual Jforex board. This is the platform which has been developed by the Dukascopy Bank SA. In it, you will find the linear regression listed amongst moving averages. In prior session, we had seen the use of Kaufman's adaptive moving average. Now, today, it is the turn of the linear regression. In the series in which we covered the introductory part of the various indicators, I had already talked about the linear regression indicators properties and these blocks customization, so I will not really go into the functioning of the linear regression in this session. In this session, we will mostly focus on how we can design the algorithm with bare minimum requirements. We will simply focus on the simple algorithm development. Now, as you can see, the linear regression follows the price action closely, but it has one advantage that it gives you the idea of the underlying momentum on a consistent basis. And as you can observe from the charting, we don't really see much zigzag moves happening in the linear regression compared to the randomness of the candlesticks. And because of its inherent advantage of being closer to the price action, at the same time also providing valuable insight into the underlying momentum, we can rely on the linear regression. And here for today's session, we will do the use linear regression and price action, and we will try to arrive at a combination which will give us a good idea of the trend, and it will help us in figuring out the opportunities to profit. So as you can observe from the chart, whenever the linear regression is on the rise, and at the same time if we see that there is good enough momentum in the candle on the hourly basis, this chart has been plotted on the hourly basis, we can look for fresh trading opportunities on the buy side, and vice versa for the sell side. If the linear regression values are falling, the linear regression values are declining, and at the same time if we see substantial downward pressure in the price action, and the last candle has closed with substantial losses, at such instances we can also look for the fresh short selling opportunity. So it can work both ways, and if we are able to figure out the combination which will give us good idea of the price action, the momentum, and also at the same time if it can give us good entry and exit point, the optimum entry and exit point, then that will make us our job much more easier, and we can profit from the trend also. So in today's session, we will see how we can design the algorithm using this simple logic. So as I said, the buy trade should happen if we see that linear regression values are rising, and at the same time the hourly candle also crosses from below to above the linear regression, and the prior candle has closed below the linear regression value. So during such kind of instances when there is substantial momentum, which we can define using the pip size, I think for the instrument of USD JPY, where we see that average trading range is around 50 pips, 5 pips or maybe 6 pips. You can use values as per your requirement. That should be good enough. If we see that there is a more price move and the difference between the opening and the closing value is beyond that range, and also the prior candle was on the lower side, but now with substantial buying momentum if the price action has jumped above this linear regression output value that indicates good buying momentum, and we can try to profit from this opportunity. And for the sale side also, we need the prior candle to have closed above the linear regression value, and the linear regression value should be in decline. And now for last hour, the price action has shown decline. It has gone down, and with substantial selling momentum, so we can look for fresh shorting opportunity. Now let us head back to the Visual Jforex board. Here we will need to do first the instrument subscription. So for that we will take a couple of if blocks, logical blocks first. Okay, this for the instrument subscription, and also one more for defining the requirement that only one trade should be open. And I think for this we will use on tick as our start point for doing the instrument subscription. I will take the default instrument, and our chart was made up of USD JPY. So for this session I will change the default instrument to USD JPY. Let me see where is USD JPY. Okay, we got this. And with it we need on tick instrument. So the tick instrument should match the default instrument, and then the default instrument should be equal to USD JPY. Here we need to define the currency instrument. Okay, I got this. And for defining the position amount, we will take position info. All position amount should be equals to 0. Okay, and now coming to linear regression values, I will change this to hourly. Shift will be 1. I will add one more linear regression block, indicator, moving average, linear regression. This should also be of hourly time frame. So I need to change it, and doing the comparison, we will do the comparison between last candle and the candle which had closed 3 hours back, or even we can keep the difference of 3 hours. So for that we will need to take the shift value 1 and 4. So in between difference will be of 3 hours, and that will give more smoothing. Now coming to the price action. For defining the price action, we need to take a couple of info blocks of historical candle, one and one more, and here this also needs to be changed to hourly, and shift will be 1 and 2. Shift 1, shift 2. Okay, so here we have these two historical candles also in place to define the price action. So far we have got in place these blocks to help us with navigating these volatility. Linear regression range can be defined using the blocks which we have got using shift 1 and shift, let me see how much I have defined. Shift 4 for linear regression, and for historical candle shift 1 and shift 2. We will also need to take two 10-second historical candles which we need to pinpoint the exact entry and exit location. For this session I am thinking of working with the pending open order. We can place the order and provide the order validity. And one interesting formation we can try, I think for this session itself, we will do it where we look for the buying opportunity when correction happens, but not at the lower value, but we will place the order on the higher side. So whenever the rebound comes after getting into the correction phase, the trade will be executed. So that will, as per my anticipation, that should improve the profitability. Okay, 10 seconds. One, and this shift 2. Alright, so far we have got these blocks in place. We have done the instrument subscription, and also we have got the linear regression and 4 historical candle blocks. Now we will need to carry out the calculation, but as I see we are running short on time. So for today's session we stop here, and in next session I will explain to you how we can take the mathematical blocks of calculation expression and check out what is the closing difference between the closing and the opening value, and if it meets our criteria. If enough volatility is there, then probably we can look for fresh buying or selling opportunity. So that's it for today's session. I will be back tomorrow while continuing the progress which we have made so far. Thank you all for joining in. See you again. Goodbye.